It's been a sensational last couple of years for Nvidia. From the October lows of 2023, stock is up 1,200%. However, if you go to the weekly chart, you can see for the better half of the last 5 to 6 months, price has been sideways. And for those support and resistance traders, all you had to do was just go long near $130 and go short near $150. As this level has been serving as a key ceiling the last 6 months. Now, before we continue with the analysis, I invite you to read this article with me, because even at a 1,200% rise in the last couple of years, this could still be the beginnings of a new bull market, because Nvidia is targeting yet another trillion-dollar industry. So Nvidia CEO Jensen Huang believes data center operators will spend $1 trillion over the next 4 years on upgrading their infrastructure to meet demand for AI developers. Since the data center segment currently accounts for 88% of Nvidia's total revenue, that spending will be instrumental for the company's future success. However, the semiconductor industry has always been cyclical, so the data center boom won't last forever. And that is why it's critical for Nvidia to diversify its revenue streams. And at the CES 2025 Technology Conference, Jensen delivered some incredible news for investors on that front. Nvidia saw the autonomous driving revolution coming. In fact, the company's automotive business is more than 2 decades old, but its revenues were so tiny that it lived in the shadow of the gaming and data center segments. However, that's about to change, because global car brands like Mercedes, Hyundai, BYD, Volvo, Toyota, and more are adopting Nvidia's drive platform to power their autonomous ambitions. In addition to drive, Wang says car companies are buying DGX data center systems featuring its latest Blackwell GB200 GPUs, which deliver the necessary computing power to continuously train self-driving software. Then there's Nvidia's new Cosmos multi-module foundation model, which allows companies to run millions of real-world simulations using synthetic data, serving as training materials for software. Now, Nvidia's fiscal year 2025 will finish at the end of January, but the company generated $1.1 billion in automotive revenue through the first 3 quarters. Wang says in fiscal 2026, Nvidia's automotive revenue could soar to $5 billion. That would be up roughly 5x. So it's going to ramp up insanely fast. Nvidia just started shipping its Blackwell GB200 GPUs to customers, but sales are expected to grow quickly. And by April of this year, revenue from Blackwell chips could overtake revenue from its previous generation chips built on the Hopper architecture, which highlights how quickly Nvidia's business is evolving. Demand for Blackwell chips is outstripping supply, which should support further strength in Nvidia's revenue and earnings during fiscal 2026. Plus, some reports suggest a Blackwell successor called Rubin might be unveiled later this year, which would further cement the company's chokehold on the market for data GPUs. Now, this is the part that got me. Currently trades at a P of 54, which is a discount still to its 10-year average P of 59. However, if Nvidia can generate $4.44 in earnings per share in fiscal 26, their forward PE would go down to 31. Crazy, crazy stuff. In other words, Nvidia stock would have to soar 92% over the next 12 months just to trade in line with its 10-year average of 59. And yes, they got some competition, Advanced Micro Devices of 1, but they can't touch Nvidia. And so it's one of the reasons why buyers bought at this level. It's trading at a discount relative to the all-time highs at $150. But scrolling out to the weekly chart, this just could be consolidation before the next leg higher, similar to what we saw in Bitcoin over the last 6 months, and then we just spiked higher on the Trump pivot. Thanks for watching. Subscribe. Please like the video.